Three amazing people here from Bumble, Harlem Capital, and Alice. So I encourage you to watch, listen, learn. We're going to do some pitching and giveaways at the end, and there will definitely be time for questions. So I'm going to hand it over to Carolyn.
Right. Thank you all for being here. Thank you, Bumble, for letting us take over your space today and bring you back into it. So I wanted to start just with some intros and let you all tell your stories because you'll do it far better than we will. But we'd love to hear just kind of your backgrounds and what brings you here today.
Want to make the first move?
I can't turn that down. Hi, that's working. Here, hello.
Just turn it on. Is it on?
I didn't turn it on.
Yeah, we'll just turn it on. Yeah, perfect.
Is this on now? There we go. Hi everyone, I'm Sarah. I'm the Chief Operating Officer of Bumble, and as a part of that job, I also get to oversee our strategy with the Bumble Fund, which is our early stage corporate VC that invests in amazing female founders and businesses led by women. And we prioritize women of color and from the LGBTQ community. We've made 9 investments thus far, including in Alice, which we're super excited about. We are a woman-founded and woman-led company ourselves that really thinks about how can we support women across all of the most important relationships in their life. Most of you probably know us as a dating app, but we are so much more than that. We also have friend finding and business connections, and in all of those verticals, we really encourage women to make the first move, which is our way of saying gender dynamics will never fully achieve equality if we don't start by addressing gender dynamics at home and in romantic relationships and give women the tools that they need in order to recalibrate these existing gender norms. And venture capital and funding female founders is a big part of that. So we're really excited to be here today and have this conversation.
Awesome. Check. Hey guys, well thank you for having me amongst a great company here. So my name is John Henry, I'm a partner at Harlem Capital. Harlem Capital is a $25 million seed stage fund that specifically invests in women and minorities. My background, just for context, I come into the scene, first and foremost, the very proud son of immigrant parents. That is always the most formative thing in my life. And I dropped out of school early to start my first company, which was an on-demand dry cleaner for film productions. And after that experience, was fortunate to sell the company, started an incubator in Harlem, and that was kind of my first touch point with working with startups as a whole. And then I became enamored with this idea of building generational wealth. Building generational wealth in our communities is something that's not as prevalent, it's a mindset. And so I met my partners at Harlem Capital and we decided to do this. A very important note, we started just by investing our own checks, very small amount of dollars, because it was not about the amount of money at first, it was about just making the first move. And so we've built that over the course of 3 years to where we are now, and we've made 8 investments to date, and we invest in the first round typically that a company goes to the market for.
Well, John, we share a lot in common because when I first got involved in the startup space, it was after actually running 2 companies of my own, but started an accelerator and realized if we could start to scale the impact of that accelerator globally, what could that look like for women, people of color, people in geographically disconnected spaces, and what an opportunity that was. So we've heard the stats a lot about 2%, just over 2% of women getting venture capital. When you look at people of color and the LGBTQ community, it's even much smaller. What exactly, when you think about the biggest problems that we can solve to actually change that number, because we've seen it stagnate now for quite some time, what are your thoughts on what we'll actually do?
Sure, I can pick that up. I think what's really discouraging about that 2% number, beyond the fact that it's 2%, is that it hasn't really changed a lot. And Elizabeth and I actually talked at Classical Grill on Friday, and I was reading some of the comments on Instagram on this post today, and one of them said, I'm not going to invest in women just because they're women, I'm going to invest in companies that I think are going to make me money. And what is so frustrating about that is there are so many women founders who are making a lot of money for their investors, and that should be what starts to turn the tide here, is that this isn't philanthropic investing, this isn't just because it's the right thing to do for social equality, there's actually a lot of money to be made. And there's some really obvious reasons that that's true. For example, women control around 80% of consumer and household spending decisions. So you would think we might know a thing or two about building consumer companies, considering we're the end audience for it. Women reinvest around somewhere between 70 and 90%, depending on the stats you look at, of their wealth back into communities. So they know things about community building and reinvesting in families and other businesses. And so at some point, hopefully the numbers themselves will play out such that people invest in women just because it will make them more money. And I think that's where companies like Bumble, companies like Stitch Fix, that are founded by women and are making big exits and are demonstrating just how much not only revenue but profit can be generated by women-led businesses, that hopefully that starts to change the statistics. And I'm going to steal one of Elizabeth's lines again. I think the way we need to look at that 2% is to say that represents 98% opportunity, but we still have a long way to go, and so much of that is going to start with the people doing the funding, and why it's important to have this conversation on the VC side, because the money is going to help invest in where the money in terms of revenue is going to come from.
Yeah, I just want to build off that. It's really important to understand venture as an asset class and where it sits in the landscape. I know it's really helpful for me. So obviously, Fast Company and a lot of the publications do a lot of reporting around venture because it's very sexy. But when I started to understand a little bit more about the landscape, venture is actually a tiny little sliver within alternative assets that, in terms of like capital deployment next to real estate, treasury, bonds, the public markets. But the reason it's very important as an asset class is because there's a lot more private money available to companies. So companies are taking longer and longer to go public, right? So think about Uber's filing for IPO this year, Lyft as well. And so in order to reap the benefits of these companies that are taking forever to go public, you have to invest privately. And so that's why I'm kind of setting the landscape here for why venture is important. So by design then, the nature of investing in venture, you're going for companies that are tackling a large market opportunity, right? And so I think that's very important for folks in the room that are looking to pitch VCs. It's storytelling and it's execution. So when you approach a VC, we're not looking for kind of franchise opportunities. I'm invested in a franchise. I own a dental practice as an example, and I get distributions from that business, but I'm not expecting that business to capture a lot of market share. So please put yourself in that seat of storytelling, painting this vision so that you can paint yourself as being well equipped to tackle that market opportunity. And what I will say about the stats, so this year, in 2018, roughly 134 billion invested into venture. About 4% of that went to women and minorities combined, yet we make up 70% of the US population. I see a lot of head nod, that's right. So like when it comes to this being a business case, 70% are receiving just 4% of the money, right? And so we are making this business case that, in 20 years, when traditional venture investors wake up and they find that their companies were, incredibly disrupted by women and minorities, like it's gonna be us who took their lunch money because we bet on you guys and we took the first move.
I love that both of your organizations are really focused on the early seed stage capital, writing those first checks, because I think it is where the biggest gap exists for what we call the new majority, these companies that are growing at faster rates, they're out there building really interesting companies, but they haven't yet been noticed by traditional venture. And so I think those first checks really help sort of catapult and propel those companies forward. When you're looking so early stage at these opportunities, how do you all see the landscape? What are you looking for before there is a ton of traction for these businesses?
Yeah, I think for us, there's two key things in any early stage company. One is demonstrating that there's a need for your product, and most of the best ideas come from solving a problem in your own way. There's great advice by like a legendary venture capitalist that said, if you're looking for your big idea, write down the 5 biggest problems you face in the day, and it's in there. It's somewhere in there, your big idea for building a company. So I think demonstrating that it solves a real need that exists, and that's basically your product market fit. And then secondly, demonstrating that you have a path to monetization. Like there have to be economics at work here. You have to be able to make money and fundamentally to be able to make a profit. So not just make top line money, but be able to make a profit after you cover all your employee salaries, after you cover cost of goods, all of those things. And so if you can demonstrate that you have those two things and a scalable path to making that money make more money and more money and more money, that's what we look for in an early stage investment. And I think that can be hard sometimes when people say, I have this really wonderful idea and it's going to change the world. And that's great, and we are sympathetic towards that and we get excited by it. But we're also in the business of building a business. And so we need to be able to see that that's going to be able to generate real capital. And I think we also have to not be afraid to talk about money and to talk about things like driving profitability. Not every big idea just has to be world-changing and altruistic. You can generate real capital from it. And we shouldn't be afraid to talk about wanting to make money as something that helps us figure out where we should be spending our time during the day. But what's exciting about early stage companies is that you're getting really big ideas, and just as they're getting off the ground and being involved in that ground level, I'm sure you feel the same way. This is really exciting.
Yeah, I love being rooted in market data. So I'm going to go really micro here for a moment because there's plenty of information kind of available on venture, but these are some of the internal data points that you see when you run a fund, and I hope they can be helpful. So one, the investment temperaments between the coasts are incredibly different, and that's really important to understand. So the West Coast, and particularly Silicon Valley, there's an incredible network of capital that exists there. And so they're a little bit more mature in their ecosystem. They have a lot more dollars flowing around. And as a result, they invest more commonly in audience-based companies that are not looking to monetize in their short term, and instead are looking to, like Facebook. If Facebook would have had the pressure to monetize in the first few years, it wouldn't have been Facebook. They needed a lot of time to build traction with their product before they can monetize later. So that's West Coast. East Coast is a lot more revenue driven. It's a lot more revenue driven. We're not necessarily looking for 20x exits. My Brandon Bryan, my business partner, is here. We have two other managing partners, shout out to them. And a lot of East Coast investors will look for reasonable revenue and a lot of M&A activity. So the majority of acquisitions start to happen between the $20 and $50 million revenue range. So we say, how likely is a company able to get from here to there? Now, some data points. The majority of companies in the seed stage are raising, I would say, between $750,000 to $1.5 million. Typically at a valuation, if you're in the Midwest, between 4 to 6 million, because the Midwest, the cost of living is not as high, so the premium is lower. If you're on the coasts, it's anywhere between 8 to 10 million. And to answer your question, which I know is in your head, is how do you make your valuation up? The answer is you make that shit up. And that's the crazy thing about venture. It's like the founder who has the ability to sit across from you from the table and say, hey, this is my revenue, this is a market opportunity, here's our valuation. Notice I didn't smile, right? Like conviction, confidence. And I will say, the more rooted you are in traction, the more able you are to defend that valuation. So if you're gonna come asking for a big game, you better also walk a big game. And so I hope those data points kind of assist you guys as you navigate this venture landscape, because a lot of it is mystified.
So talking about data, it's one of the reasons that we were so excited to partner with Bumble on this fund, and really thinking about how does information help us make the venture process more efficient and more effective. I think information is one of the big pieces that's been lacking for so long. Yep. So we know women and people of color are getting less money. I think the question has long been up for debate as to why. And I think we're starting to chip away at the answers behind that. But what do you think about the role that data can play, and what are the big questions that exist for each of you that we can help answer?
So I think one of the barriers that exist to women and people of color gaining access to venture capital is the lack of information. And that's sometimes data, and that's sometimes just the know-how. I mean, if you think about the way that the founder networks and venture networks are established, there's a lot of flow of information. And think about the stats and the statistics you just shared. They're like, who do I pitch and when, and how much do I ask for, and how do I set a pre-money valuation? What is a pre-money valuation?
Right.
How is that different than post-money? Women and people of color historically haven't had the networks to even go and ask those questions to. And so some of it is an information gap. Because not only can you not get in a room to pitch your idea with some of these VCs, but you don't even know when you're supposed to, because you don't have someone that you can ask those questions to. And so a big piece of this, I think, is making that information more readily available. And that's part of the reason that we partnered with Alice. So when we announced last July, that we were doing this early stage investing, we basically said we have $1 million to invest. That's a small amount of money compared to your 25. And yet, there was such demand on both sides for it, both from incredible founders that came looking for, in some cases, really small checks just to help them get things off the ground, and from interested LPs who wanted to put money into the fund and help us do more. And what that revealed to us is that there is far more demand than we would ever be able to meet in terms of just capital alone. But what a lot of these women needed wasn't just financial capital, it was the intellectual capital to be able to ask those questions and to know, where do I find a bookkeeper and how do I start to do financial statements on a monthly basis, and what does it even mean to build a business model, and what does a 10-page investor deck look like? So we partnered with Alice to say, hey, we might not be able to give everyone access to funding, but we can certainly start to give access to that information. And you would describe it better than I ever could. But what Alice essentially does is provide those resources and access to that intelligence that so many founders need so they can get those questions answered.
Yeah, our goal is really understanding that the path is really different for entrepreneurs on the coast versus entrepreneurs in the middle of the country, for women, for men, for people of color. All of those experiences impact our own journeys through entrepreneurship, but help us get connected with the right organizations like Bumble and like Harlem Capital that are really focused on these audiences. So,
Yeah, I want to bring that, just a note on the data piece. Guys, you can't be what you can't see. You can't be what you can't see. And so, when we noticed that there was a lack of diverse funded entrepreneurs, when you peel the curtains back, it's because there's an even fewer amount of diverse fund managers. Like, I get chills thinking about this because it was like we've stumbled now into this, into this role that's incredibly important to society because there's trillions of dollars flowing around in the ecosystem at any given time, and there are just a handful of people that direct the capital, guys. And I don't feel like people are ill-intendedly excluding Illuminati kind of vibes, but I do believe that you do what you know. You just do what you know. And so if the majority of venture investors historically have just been, white males that come from certain schools, it's not just race and gender, but it's also institutional, what have you, then the founders that are going to have access to you are going to come from those networks. And so the way to chip away at that is diverse-led funds, deploying capital and redirecting it. So, yeah.
So can you share with everybody if they're interested in the Bumble Fund or interested in Harlem's Fund, where do they go? How do they find you all?
So for us, it's pretty easy. Download Bumble, go to Bumble Biz Mode, which you can switch between Bumble Dating, Bumble Vegan, Bumble Biz, go to Biz Mode, and there are details within Biz around how to apply for Bumble Fund investments. That will direct you to a platform that's powered by Alice, that allows you to submit all of the details about your business, allows you to attach an early stage deck, gives you access to Alice's incredible platform of resources, and then also will put you in front of us so that we can consider funding. And we just announced that we're opening up around 3 of funding, so we're actively soliciting pitches right now. We usually write checks between $25,000 and $50,000, but those have ranged from as little as $5,000, which was the very first money in the door for a company to help her get incorporated and build her first product samples.
That's great.
Up to $250,000. So it's really dependent for us on the size of the business and what the need for that capital is.
And guys, I host a show on VICELAND. It's called Hustle, and it's all around helping founders grow their business to the next level. So if ever that could be a resource for you guys, I take pride in the fact that the show dives deep. Some of the folks here watch and support, and I appreciate you. So if you're looking for a resource, please look to that. In terms of how you can reach us, we are one of just a handful of firms that are very visible on media, and that is by design. We over-index where our constituents are, minorities, women. We're consuming stuff in the new media environment, and we produce an obnoxious amount of content, from research reports to the data piece, because a lot of firms like CB Insights and PitchBook haven't collected a lot of this kind of data because they're sensitive to it. We went out there, did the legwork, we share those research reports. You can reach either of us on Instagram, LinkedIn, Twitter. I mean, you'd be surprised, I think, how responsive we are. because that's part of the mission here. You have to lower the barrier to entry and be accessible. So I hope you guys hit me up on there, Harlem Capital or John Henry, and I hope to get your pitches. We invest pretty actively. We do about a deal a month. We do see 500 deals a year, so we have a 2% investment rate. But please, we want to see more. Send us your pitch decks, refer your friends, tweet, just like, let's aid this problem, and it takes a village. So we would appreciate your support.
And I want to encourage you all, we're on Alice having a community that's open, as Sarah mentioned, through the Bumble Fund as well. You can find it on there, it's open to everybody. But to help answer your questions, for those of you looking for early stage capital, making sure that you have all the answers to what you need to go get the dollars that you're looking for. I want to open it up to some questions from the audience. I think we have a roving mic over here as well.
Yeah, so be bold. These are great people here, so make sure you introduce yourself, what your company is.
So thank you guys for being here.
Thank
really,
you.
really enjoyed the part.
Thank you.
One of the things I wanted to ask is related to what you were talking about in terms of networks, in terms of the people that you know. And so much of venture is going out and soliciting pitches and working through those networks. And so one of the things I'm wondering is, from the networking aspect of getting those companies that are women-led, that are women-led, in front of and connecting with VCs, even to make those pitches, what are the communities and opportunities you see there?
I mean, this is one of the reasons we built Bumble Biz, because you're
Right.
exactly right. We need to be doing that sort of care and nurturing of our networks on a daily basis. So many people neglect to network overall until they need something, whether that's funding for their business or a new job. That's too little too late. It's like not brushing your teeth until you have a cavity, right? And so Bumble Biz is designed as a platform to help with that networking. No one wants to go to those crazy mixers in Florida where you wear a name tag and you're like wandering around trying to figure out who's relevant to you. It's basically your virtual version of that. And there's tools within Biz to say, hey, I'm specifically looking for a mentor, or I'm looking for a venture capital, and you can connect with people who are on the receiving side of that need that you have. And I would encourage us all the time to not just wait until we need something to do that work, but to really actively be engaged in it and never undersell any connection that you make, because you never know how many connections they are away from the VC funding that you need.
My take on that is back to social. We have sourced directly at least 25% of our deals that came through like LinkedIn or Twitter. We're serious about this because I just genuinely believe that the only way that you can replicate this at scale is on social. And so we, by design, nurture real conversation. We have real founders reach out. We remain accessible. And you can spot pretty quickly because there's context. I can tap through in your profile, see, okay, they're not going out clubbing every night, like they're running a business. Send us your deck, we take a look at it, we jump on a call, we do some diligence, and you'll know pretty quickly if we're gonna move forward. But I think media plays a key role to community and networks. Not to understate the problem though, it's massive, but that's our little chip at it.
Hope you didn't see my pictures from last night. Carol, you want to add about networks on
Yeah, I'll say, I think, first of all, like Sarah said, always keep pitching. Everything is an opportunity to sell your company, and whether that's to investors or customers or partners. There are so many pieces of this puzzle that fit together and overlap. Funding doesn't just come from venture capital, it comes from angel investors, it comes from partnerships, and a lot of the other things that we've talked about today. The second piece of that is on Alice is one of the things that we really tackled early on in recognizing that community is a key part of this. So Bumble Biz is a great resource that we share because of what they do to help connect people. But there are also lots of different communities on there that talk about all sorts of different things to help you get connected with people and push your companies forward.
Next question. Ruth.
Hi, I'm Ruth Chandler Cook, the founder and CEO of Hire Her, providing diversity as a service, so the solution for the underrepresented teams. And so my question, John Henry, is how do we overcome the problem of that diverse founders experience if there's more than one person that may be working on something similar to them? How do they get people to look beyond what's in their immediate portfolio and see it as a threat, and maybe look at the opportunities that are presented, particularly for a huge market like the recruitment market that's projected to be over $300 billion market globally?
So you're asking how does the VC, can you reframe the question again?
Sure. So to make it plain, how do you look beyond what you have within your existing portfolio at opportunities where you know that the demographic is changing and growing, or where the market is growing, so that you don't view emerging companies as a potential threat, but as an opportunity to capture?
I understand. Yeah, that's a great question. It's one that we haven't had a lot of time to explore because we have 8 portfolio companies. Sometime late next year, we'll have more than double that. But I can say that a lot of our companies are pretty symbiotic. So we invested in Beauty Bakery, which is a cosmetics company with, they're founded by a strong, black woman who survived cancer, and she knows how to storytell really well to that consumer group. We're also invested in Blavity, and so there's an opportunity there between media, consumer, but we're also looking at a lot of industries where it's not necessarily consumer facing, and we're in enterprise as well. We're in logistics. We invested in OntFlow, which is a company that is looking to increase access to menstrual products everywhere. So she's selling organic tampons into enterprise levels because the regulatory environment is now pushing big corporates to stock basic menstrual products, and they got to get those from somewhere. So anyway, to your point, I see very few times do we see like a direct competitor. So we'd be open to a lot of deal flow in the diversity space.
Great, next question. We're going to go here first, then we'll come to you, okay?
Hello, everybody. My name is Jarrell Jones. I'm the founder and CEO of Mall Run. It's a retail delivery service based in Houston, Texas. And I have a question for all of you guys. What do you think is the best way to go about finding a mentor? Because it seems like a lot of times, a lot of successful people kind of withhold information from up-and-comers, and it's just been a hard thing for me to just find a mentor that can help me out with stuff. So what would you say the best, when you found your mentor, how did you find it?
I've never actually had a formal sort of mentor relationship where that person may know they're my mentor, but they are. I always find the best conversations happen really organically. So somebody that I've met, had an interesting conversation with in passing, ended up going to grab coffee, and a relationship evolves. But there are people that I depend on very much. I have mentors that are very much at my level and I have really close relationships with. Like Elizabeth that I turn to for a lot more answers. Then I also have people that are 20 or 30 years my senior that I ask a ton of questions to. So I think it's just looking for people that you connect with personally, because I think that's very important to the relationship. And then also people that offer some aspect of something that you want to learn about. They just keep that conversation going, but also continue to update them on the things that you're doing. Shoot them an email about your wins, about your struggles, about kind of what you're going through, so that they're constantly kept in the loop, and follow up on the advice that they've given you that you've used.
I feel like there's a piece of your question that concerns me particularly. And I think that is what can sometimes be hard for women of color, women in general, people of color, is that for so long it felt like there was one seat at the table for anyone else, and so maybe it did feel like you had to hold that. I mean, I started my career in public equities investing. There was a 50-person investment team, 3 of them were women, and there was some competition, jockeying for what is that seat. And this is what's hard about representation, is because we really are going to depend on one another to pull each other up. And so I think that means that it's incumbent on all of us to really try to create more seats at the table. And I would say that you now, especially as a founder and CEO, are in a position where you're arguably the mentor for so many others. And by looking in the other direction, it'll probably open you up to more opportunities and maybe even indicate to you what you're looking for in a mentee in a way that will help you to identify that mentor in the future.
I just want to say, don't believe that narrative. That narrative that, successful folks don't want to help you. If you ever come across that person is insecure in their value. And there's an illusion or a facade that person is, successful, maybe to an extent. But I'm sharing this now because, we're out here raising a fund, and so by definition, we're getting in rooms with some of the most impactful people in the world. And what they are is a flow, an abundance, because they know there's plenty to go around. of opportunity. And in fact, it's the opposite. When they see someone who steps up to the plate with an earnestness and a follow-up, you want to help that person. You want to help that person. And I had that. So to your point around how you find them, I think it's bullshit that you find them on the blogs, that you find them, that you reach out cold. Not that cold outreach isn't the way. I think you find them on the path. When you're actually working and doing the work, that's when you find the players in your space, because they're there, right? They're already there doing the work, and then they'll spot you and say, man, this young brother, I like him, man. And then you start building, you start shooting the back and forth. The way to retain, to her point, I don't think the title mentor is going to be there at first, but the way you nurture this relationship, which in my opinion is rare, is through follow-up, man. When week after week you're like, yo, you told me to do this, boom, here it is, boom. That growth, oh man, it gets you so excited to want to work with someone. So,
Thank you.
Yeah, absolutely.
Hi, my name is Ashita. I'm actually currently a student, but I'm also a teacher at a venture capital firm in town. You mentioned briefly about how there are not only gaps to access to a seat at a table with a VC, but I guess a gap in understanding and knowledge of VC between among women and people of color. So how do you, in your roles as venture capitalists, work to deploy capital in an efficient and effective way to actually make an impact with these companies?
Yeah, I'll take it first, we'll go reverse. So that's a great question. Going back to like media being a pillar of our firm, it is so important because media helps shape perception, helps shape what you think is possible for yourself. And so we, again, over-index content, outflow. I really can't stress how important it is to submerge the entire ecosystem. I want to beat you over the head with the information. I want you to be like, yes, John, I get what VC is, right? Because that helps shape, at least a common layer of like basic knowledge around what venture is. So, to your question, how do we more efficiently distill deal flow? We have a diligence process, but what I want to see is an uptick at the top of funnel. I want to see more deal flow. I know that there are more founders out there doing worthwhile things, and maybe they feel like venture's not for them, or maybe they don't have the right connects. I'm not sure, but we'll be working on that top of funnel with things like cable television. I mean, that's as broad as you can get to get more people in the funnel, and then trust that we're doing our job to efficiently distill deal flow.
Yeah, I think similar for us. I mean, even the fact that we've announced this next round of funding and we're advertising it through Bumble, which has 50 million users worldwide. So much of, I think, what happens in VCs and even knowing how to get in the room is sort of like secretive, and you have to know the people that are going to pass you around to the right places, and I'm sure you're learning this through your internship. I think we need to make that process more public, and the information about when to pitch and how more publicly available. And that's what we're trying to do with the way we communicate by Bumble. That's why we partnered with HelloAlice to help us streamline the pitch process. So we're also in a tough position of, as passionate as we all are about this, we're trying to run this technology company as our day job as well. And to your question about how do you efficiently deploy capital, so much of that is finding efficiencies and creating that ecosystem in a way that we can manage along with our day job.
Yeah, I think the biggest disservice that the venture capital community does to itself is this whole idea of referrals. Because while that's great and you can get really wonderful people in the door, you're getting the same types of people in the door. I would encourage you all as business owners to really look at people, not just the partners at these VC firms, but look at all of the people that touch those funds in different capacities. Working with people who are early stage at those funds, getting in the door and building those relationships. Because so many times I think we try to jump to the top, where it is a lot harder to get in the door. So start at the bottom and work your way up, and you can start to build those relationships. And then the other piece is, again, is continue to share information. Even if nobody's responding and you don't know if somebody's seeing it, somebody's reading that email somewhere. Send it and send it again and send it again, and keep those updates coming, because they will start to get noticed, but we will see that progress happening.
Top down too, though. Bottom up, I agree, but also top down. Because those emails don't always get read. A lot of them just get straight to the trash.
Hi, good afternoon. I'm Maya Powell, founder of Spa Utopia. So we're a luxury spa on demand, essentially the list for all things luxury spa holistic wellness. So So this has been great. Thank you so much. One of the questions I have is there a strong preference towards B2B companies versus B2C companies? My company kind of does both. My passion is delivering these services to women at their homes that are very busy, but we also work with very upscale hotels, and that's an easier way to scale. So, as I'm preparing a raise, some of the feedback I've received is really just start in one place. So my thought is starting with scaling the hotel side, and then getting back later into more of the passion area. And I wanted to get your feedback on that.
Love that.
I think every fund is a little bit different. There are some that are very focused on consumer as end product, but if you can build an enterprise model, usually the economics are stronger, it's more predictable, recurring revenue. One of the businesses we love in our portfolio is a company called Mommy, and it is maternal telehealth focused on lactation, growth, and postpartum. So their end consumer is a consumer, but their payer model is by contracting with enterprises like the state of New Jersey or UPMC. That is a really strong business model. When you can serve the consumer and you build demand with the consumer, that you find an enterprise model to pay. Doesn't mean that all businesses in our portfolio are like that. We have some that are consumer, but I think there's a reason that so much early VC was focused on enterprise software because it's super scalable, very predictable revenue. And so if you have a pathway into those hotels, that's definitely something.
Yeah, to piggyback off that, consumer exits, when you look at like just the stats, consumer exits are the biggest exits, but they're typically concentrated in just a handful of the top winners. So they yield the most profits for VC firms. But enterprise exits, although they're typically not as big, they're more frequent. And the tough part about enterprise is breaking in and getting the buy-in and validation of one corporate partner that you can then build into a portfolio. But the nice thing is that once you break in, that's barrier to entry. There's complexity there, and usually there's value when you take on complexity. To your question around which one's better, my perspective is that it comes down to what you and your team are well equipped to do. There are just some founders that have incredible DNA in consumer and would knock it out of the park in that. And I would also listen to the market. If you're getting that feedback and hotels are excited and they're signing up, then I would 100% explore this B to B to C model that you have going on. And I think the economics are great, and I think it would be a business we'd be interested in taking a look at.
Focus is very important. It's interesting, the early stage founders start with this very big picture, start to kind of tackle the whole problem at all angles. And over time, you see businesses and successful companies start to very much narrow that focus over time as they realize where the big opportunities are. Once you tackle that and achieve that and gain success, then you can start providing that focus again. But it's so important to find your focus and know what to say no to, because you can't do it all. Elizabeth and I always have this monthly meeting of no, where we literally check off things off our plate that we need to dump and stop doing because we just don't have enough time. We're still a scrappy team. It's, I think, probably one of our most valuable hours of the month.
Great, we have time for two more. Yes, sir.
Hi, thank you all for doing all this. My name is Tana, this is Karen. We're co-founders of a company called Inclusive Breathings. We basically make products that spread the idea of inclusive design, just to bring people from different backgrounds and medical conditions together. And just to everyone's point, like for us, we're kind of a new business. So my question for you all is there like 1 to 3 concrete things that we can bring to venture capitalists and mentors, questions or data points, wherever to start the conversation? Because to your point, you don't know what you don't know, right? And sometimes just going up and saying, this is our mission, this is what we do, can you help us? Is so broad that someone might not know what to help you with. So can each of you just maybe go around and say 1 to 3 things someone can bring on a deck or some data points that gets that conversation going? Thank you.
Go ahead.
I'd say the big picture. What is sort of the big vision of what you're doing? What traction have you had today from getting there, and why are you the perfect people to do it?
I think research is a big thing that it's such low-hanging fruit that I'm shocked at the amount of people that don't do it. Like we have our criteria very clearly listed out on our site. We're post-revenue. Like it's almost like a waste of my time, your time, everyone's time. You clogged my inbox, you didn't do the research. So if you do the research and get context on that VC, then you can more pointedly ask for something that sets them up to say yes. Like, don't ask for general advice, respectively, like, time's too short for that. So if you have a highly pointed ask for me that says, hey, John, I noticed you're in this space, curious how you think this affects the landscape, I'd be a lot more prone to answer. And then the next thing is, once you've done your research, reach out when you feel you're ready. I really don't believe in asking VCs for advice. Don't do that. Like, and I mean that respectfully. Like, if we're homies, yeah, ask me for advice and consider me a homie. But when you're raising capital, I want you to put your raising money hat on. And advice is cheap, get the money. You know what I mean? Because it's out there to get.
Yeah, I think this is the theme of the conversation today. Whether it's a mentor or a VC that you're talking to, be very specific. There's no question I hate more than, can I just pick your brain? Everyone's time is so valuable. You come with a really specific question of, even to the question before, hey, I have this model, I'm thinking about should it be B2C or should it just be consumer facing? Those are great questions, and I think a lot of people who have spent their careers around business get excited answering questions like that. But the really general, can I just take some of your time to sort of walk you through a big idea, is far more people's time is still my question.
Thank you. Okay, last question. Oh, yes, ma'am. Come on up. Please.
Hello, thank you for being here. I really enjoyed all your remarks. My name is Gail. I do not have a company, but I just work with companies. And my question has to do with providing what I call smart money. In other words, any startup company needs money. They need seed money. They need mentoring and so forth. There are clearly companies out there that will fund you, or friends and family will fund you. But as companies do go out and look for VC money or larger funds, if you could comment on what is it that different investors can bring to the table in addition to that money and the value add that can provide.
I think capital can mean so much more than financial capital. And I come back to the phrase intellectual capital a lot. I think especially if you're going to be giving out a board seat for the money, the equity that you're giving away, but even if not, even if you're just looking for a sounding board, going to someone who can answer the questions that you have. So if you're at a phase where you're thinking about how do we expand internationally, talk to people who have experience doing that. If you're at a stage where you're looking to do strategic partnerships, talk to someone who has that experience. And leaning into the intellectual capital piece and getting someone with the experience that is solving the problem you're having with your business is a really good place to start.
One key thing to distill in venture versus like private equity. In private equity, I'm buying your company outright. Controlling stake is done. In venture, you're raising around typically from a number of investors. And so, there's room, and there should, your lead investor, if you can get them to be smart money, strategically valuable, then do it. But also, money's money. So like if the majority of your round is filled out by folks that you feel provide that value, I don't think it's any harm, any foul to bring kind of a net neutral. And also this idea of like friends and family money. I ain't got no friends and family that could write me a $100,000 check, And so for me, it's about kind of building your traction to the point where you can become interesting. And if you're a woman or a minority, usually by the time you get to the table, just given the odds, you're usually going to be way more resilient, and because you've had to overcome a lot to get there. So we take a look at that as well.
And I share with investors why you think they're a good fit for your company. It's compelling to them to know that they can bring something additional to the capital.
Great point.
That they can help propel your company forward. Obviously, once they're giving you money, they're very invested in seeing you succeed. So share that with them up front. Here's why I think you can huge benefit, and lay it out for them.
All right, can we please thank the wisdom in front of us? My goodness, amazing. So we have one more giveaway, but really quickly, John, can you quickly tell them about the report y'all just did and where they can find it? I think that would be really great for this group. I loved it.
Yeah, thank you. We published a report called the Power 200 where we share the top 200 Black and Latino and women venture capitalists that you need to know. We also kind of broke down their stats from what types of checks they're writing, where they're looking, what industries. I mean, there's a sparse amount of data in this space, and so we're putting in the legwork, manually collecting all that data with our intern teams, and then just sharing it. So it's on Medium, or you can find it on our Instagram at Harlem Capital, and consume it, share it, and thank you for asking.
Yeah, right on. So again, on behalf of Bumble and Alice. It's been a great day, first of all. What an amazing morning. Again, we are dedicated at Alice and Bumble to really help women, people of color, the LGBTQ community launch and scale their businesses. So at any time you can go on, download the app, and apply for both our seed fund, but also, most importantly, enter into